So Alphabet is one of the biggest companies in the world, and a lot of investors are interested in considering this business for purchase in their portfolio. And I'm going to evaluate the stock here, and I'm going to emphasize one huge reason why I'm bullish on Alphabet stock, and then one big reason why I'm concerned about Alphabet stock. And I'll talk about those two big issues in broader context, looking at their revenue growth and other important metrics as well as valuation to answer the question if I think the stock is a buy, hold, or sell at these market prices.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one thing I wanted to highlight with Alphabet is over the previous decade, they've grown revenue from 75 billion all the way up to 371 billion. So that's growth of approximately $300 billion in revenue over a period of 10 years. That's phenomenal growth. And it's especially more phenomenal when I think about how they've been able to do this by offering mostly free products, right? Other than their Google Cloud segment, other than a few products that do generate some revenue from charging customers directly, most of their business comes from giving customers free products and services and then generating advertising revenue off of those engagement in those services. And I think that's an unbeatable strategy if you scale it up because the customer value proposition is one of the most important steps in my investing framework, and Alphabet scores an A plus like 100% in this rating because there isn't anything better than free, right? You can't get any lower than free in terms of our business world. Maybe one day we'll get to the point where these companies start paying you to use their services because they make so much money off of you when you use their services in advertising revenue. But for now, free is as low as it goes, and then it becomes a question mark. How good of a product or service are you offering? Because free doesn't mean that it's actually a good product. But Alphabet's been able to deliver a good enough product that gets, they have over 6 products that have over 1 billion monthly active users. So they're offering a good enough product at a great price, free, and still generating significant revenue in return. Of course, this would all be meaningless if the unit economics wasn't also making sense, right? If they weren't profiting, if they were just giving you a free product and it cost them way more than they're generating in ad revenue, they would go out of business. They wouldn't be able to sustain themselves. But they're able to do this and generate significant profitability, one of the best profit margins of any company I'm following, especially at this large scale. So that's a truly impressive feat. But here's a point where I will highlight the biggest risk right now, my biggest concern with Alphabet right now, and that is the changing consumer search behavior or research behavior, where before, when you were curious about something or when you needed to know something, you almost always went to Google search. They dominated the search industry, market share estimates of 85, 88% for many, many years for online search behavior. Now, with the advent of large language models like ChatGPT, even their own large language model and other large language models, when you need to find something out or when you need to learn something or when you need information, there is another viable option, and more people are choosing the large language model instead of going to a search engine to get their result. I think it's cleaner. The large language model is not filled with all this advertising, and you don't need to dig as deeply to get your answer. It's just presented to you nice and cleanly. And so that's my biggest concern with Alphabet is how will the business respond to that changing consumer dynamic? They have their own large language model. They're incorporating AI into Google search results. They're they're not neglecting this. They are investing to deal with this change in consumer behavior. but there's still a question mark on how it impacts the business, revenue, profitability, profit margins, competitive dynamics, all of that. And so that's my biggest concern with Alphabet. That being said, I'm reasonably confident they will be able to deal with the challenge of changing consumer behavior, but I'm not 100% confident. I'm reasonably confident that they will be able to deal with it. Okay, so the next thing I wanted to highlight is the company's return on invested capital. And this is, as I mentioned in the introduction of the video, the one big thing that I'm bullish about with Alphabet stock, and something that I think I view differently than many other investors is many investors are concerned about all of the money that Alphabet is spending on artificial intelligence. I believe they estimated they will spend $80 billion this year, which is up from $65 billion last year, and they've indicated they will be spending more next year. So all of that capital expenditure has investors concerned about the return on that investment. What if it doesn't work out? What if you're wasting that money? And so I think I'm different in how I view Alphabet's spending in this category because of its history of relatively successful capital allocators. They've done a pretty good job in this regard, and the numbers prove it. The return on invested capital, if you look back to 2021, 35%, 29, 29, 32, 30%. That's really good. That's nearly triple the company's weighted average cost of capital. That means they're adding significant shareholder wealth every time they put a dollar to work. It brings back a good percentage return on that investment. And they're not, they weren't born yesterday. They've been doing this for 2 decades, more than 2 decades, and they've demonstrated success in this regard for a pretty long time. So in that way, this is something that I'm bullish about with Amazon. I'm sorry, Amazon, but Amazon also, while I'm at it, with Alphabet, because they've been so successful here with this investment, and they found something that they can put hundreds of billions of dollars in, right? Before AI and before these investments, one of my concerns with Alphabet was, what are they going to do with all the cash flow the business generates? Because they weren't paying a very lucrative dividend. Only recently did they start, and they weren't buying back shares all that much. Only recently in the last few years did they increase their share buyback. So they were generating all this cash flow, and they were just leaving it and letting it sit there in the bank, earning whatever it is that a savings account or a money market account, 3 or 4% will earn. And I was of the opinion, if I'm investing money in you as a management team, and you're taking money and putting it in a bank account earning 3 or 4%, I could do that myself. Why am I investing in Alphabet stock? So I'm actually more encouraged that they found something that they can invest hundreds of billions of dollars in that they feel is going to bring back a good return on investment. So I think I'm a little bit different in this regard because many other investors are a lot more worried and concerned about this massive investment, whereas I'm more confident and excited that this management team has found something that they're going to put large amounts of money to, and they've got a great history of being effective capital allocators. So this is something that I see as a positive thing, whereas some investors might see it as a risky or concerning thing. So looking at valuation, my intrinsic value per share calculation for Alphabet has the business worth $258. Current market price is $241. It's been on a tear lately. It's closer to its 52-week high at 256 compared to 52-week low at 140. And after the decisions, the court rulings in Alphabet's favor, investors over the last month or two have gotten really excited about Alphabet stock, and the shares are rallying. But even at these current market prices, I think the business is at a fair value. I mean, if you want to have a smaller margin of safety, you can say it's undervalued. But when it's this close, less than 10% difference, I don't usually say it's undervalued. I just say it's fairly valued. But Alphabet's the kind of excellent business, right? I categorize this as one of the Hall of Fame businesses. And if I can buy a business like this at a fair value or slight undervaluation, I think it's a great deal. And so today I'll, reiterate the fact that I think Alphabet is one of the best 6 stocks you could buy right now for these reasons. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.